Hey guys, so the topic of the conversation this week with my students have been about managing risk. Now, of course, we mostly talk option trading, somewhat future trading, but overall we talk about the market, okay? Understanding the stock market, investing outside of option trading. And when it comes to managing risks, right? When you're trying to trade options or whatever market you're trading, when you manage your risk, you know when to cut your losses. You know not to risk your entire portfolio on one trade. You're not opening such massive position sizes that if it went wrong, you just wiped your account and now you're out the game because your entire account is blown. So I don't exactly want to look at that part of the market risk. I want to look at the investment side of managing your risk or understanding market risk, which is kind of just systematic risk. And then you also have like company specific risk, like unsystematic. So let's look real quick at company specific risk. So think about it like this. If you have something that you like if you're in tech, me personally, both of my startups are in tech, right? I have a consumer electronics startup as well as a wireless carrier, which is in the telecommunications space, okay? So me, just someone in the tech space will automatically gravitate towards tech stocks, all right? Google, potentially Amazon, like Meta, or even Qualcomm, like AVGO, NVIDIA, all of these companies that involve technology of some manner, okay? I would say, all right, I got 10K to invest. So I'm going to put all of my money in the tech industry as a whole. Now, let's just say we chilling. We wake up one day or we watch the news and they say, okay, we are going to ban all cell phones. Okay, meaning we might have to go back to landlines, right? We ain't got nothing to scroll while we out and about. And they say we're going to ban cell phones. What do you think would take place if politically they just decide we're going to ban damn cell phones? Think about everything that will have the biggest impact from a cell phone ban. Okay, and the reason I'm using that as an example is because when you look at things like company specific risks or industry specific risks, you will look at things that is all in one basket, one industry. Okay, so if a major catastrophic event happens in that industry, what's going to happen? The market is going to crash in that particular industry. Now, depending on what the news may be, it could wipe out across the board and kind of flow into other industries. But them saying, okay, we're going to ban cell phones. Cell phones can no longer be used. Think about the things that, okay, you got Apple. We already know Apple's going to crash. Apple has iPhone, right? Look at AVGO, Qualcomm. They are going to crash. Where do you see Qualcomm? You see them on electronic devices. Think about NVIDIA. NVIDIA makes chips. So if they're going to ban cell phones, then maybe, just maybe, there's going to be some other shit that's going to follow. Potentially computers, potentially tablets, things that need chips, okay? Then you keep looking at everything in that industry that will fall. Even Facebook, even Google. Why? Because we are on our phones on Facebook, right? That stock is going to crash because if people don't have access to a phone, then we got to rely on potentially a computer. But that gets banned. What happens? That whole company is going in the garbage. Look at Google. If TikTok was a public company, they would too crash. People are Googling things on their phone, and if cell phones are banned, Google search will definitely drop drastically, or the use of Google will probably drop drastically. Now, you got a little 50-50 because you got the computers as well, but that's just an example of when you're looking at these kind of things happening and why you hear the saying, do not put all your eggs in one basket. No matter how much you understand a particular industry, you should not invest all of your money in that particular industry or just one company. Okay, you may say that you like Nike or you are athletic. You want to only invest in Nike or apparel athletic companies. Well, athletic apparel companies, right? You want to just put all your money in there. You got 5K. You say, I'm just going to put it in Nike because I resonate with Nike. I wear Nike daily. I'm an athlete. I do this. I do that. You do not want to put yourself in a situation where anything at any moment could happen with Nike because it is a company specific investment. And if something happens with them, your 5K may be 1,500 in 3 weeks. Okay, so you don't want that to take place. This is why you do not invest everything in one company and one industry. You avoid that risk by diversifying your portfolio, spreading out your investments across different things, whether that's technology, whether that's healthcare, whether that's industrials, whether that's other things, like commodities. You have a wide range of things that you are able to invest in so that once one thing goes down, you still is keeping things afloat with the other industry. Let's look at market risk. This is what you call systematic risk. Now, there's no way to avoid this because market risk is just like, oh, you know what? Perfect example. What's everything we've been seeing take place since we got into office? He has been flip flopping, been dropping news, dropping tariffs. We're in trade war, and it resulting in the market going down. That right there is what you call market risk. It's systematic risk. There is absolutely no way to avoid this in a way that you would avoid unsystematic risk. Okay. The only thing you can do here is just let it play out. This is why you hear people say when the market crashed and the stocks are on sale, we're buying. Because even when a crash takes place or the market is like we hit a recession, the market eventually recovers. Historically, it has always recovered. Even when you look at 2020, we recovered. Every catastrophic event that has happened on the market, there was a recovery that took place. And so when things like that happen, this is when you do not sell off your portfolio. Or if you do sell off, you pick the ones that may have a harder time recovering from what's taking place. But you don't sell off the entire thing. You buy while the stocks are low and allow it to increase again over time. You got your new portfolio or these new stocks that you may have invested in at a much, much, much lower price. That was damn sure something that I was doing when we were getting these massive, massive downturns in the market that we have been seeing since the trade war started, since the tariffs started, and all of these other things, okay? So these are some things that you just cannot avoid. The only thing that you can do is know that it will recover and you allow it to play out. And the only thing you have right now is time. When you are option trading, just know that managing risk is important, but when you are investing, it's even more important because some places you can manage it, and then there's other places where you can kind of add to it, average down your costs, and just let the wave ride, okay? And you just have to let things go back up. So I hope that made sense. This has been a conversation that I have been having heavily, especially with a lot of new students, because when you first start trading, one of the biggest issues that we have is managing risk. Okay, we try to put our entire portfolio, our entire accounts into one trade, right? We're getting 5, 10, 15 contracts on one trade and it just all goes left. And now let's just say we had 2,000, now we got zero. When we could have just put in, 25% of our, or maybe even 50%. I wouldn't even say go that high, depending on how confident you are in the trade. Manage your risk by not putting too much into one position, knowing when to cut your losses when it comes to trading. Okay, and when it comes to investing, not putting all your eggs in one basket. In other words, investing in the same industry or the same stock over and over again with no diversification. And when the market crashes, use that as an opportunity to put some more cash into it and let that thing ride up because you will most definitely see that with time, that shit will pay off.